Hi, welcome to Slay the Spider. I'm Jim B, and I'm the creator and host of Slay the Spider. Shares of the S&P 500 are called S&P Depository Receipts, SPDRs. Spiders. Slay the Spider means I intend to beat the S&P 500 quite substantially. For the week ending August 12, 2022, the market staged the end of a good bear market rally. In healthcare, biomedical, healthcare, and drugs all advanced. In media communications, internet advanced, telephones advanced, and media advanced and crossed over to the bull side. In technology, semiconductors declined sharply. Computers, software, and electronics all advanced. In consumer discretionary stocks, gaming, restaurants, leisure, autos, and retail all advanced. Household goods declined. In the financials, Wall Street, finance, savings and loans, and real estate advanced. Banks advanced across to the bull side, and insurance advanced. In the industrials, aero defense, machinery tools, building products, and waste management advanced. Chemicals advanced and crossed to the bull side. Steel and metals both advanced. In the others group, on the bull side, textiles, business products, and protection and safety advanced. On the bear side, transports and electric utilities advanced and crossed to the bull side. Oil and oil services advanced. Food was unchanged. Gas utilities advanced. Forest products advanced. And precious metals were unchanged. For the week ending August 12th, there were 3 sectors that were unchanged. 35 sectors advanced. 2 sectors declined. 5 sectors crossed from the bear side to the bull side. There's now 30 sectors on the bull side and 10 on the bear side. Overall, the market score changed from 57 to 63. For the week ending August 12th, the S&P 500 closed at 4280, up 135 points or 3.25%. The Dow Jones Industrial Average closed at 33,761, up 957 points or 2.9%. The Nasdaq closed at 13,047, plus 389 points, up 3.08%. This week we had 249 stocks went from sell signals to buy signals. 7 new issues. There are now 45% of stocks on buy signals and 55% on sell signals. Overall, our market score changed from 57 to 63. In summary, consumer discretion has led the way up in this 4-week rally. Tech was right behind consumer discretionary stocks, but semiconductors, usually the tech leader, showed extreme weakness this week in a rising market. That's not a good sign at all. The industrials and financials are next in this rally. Healthcare had the lowest losses this year so far, but have not been big winners in the rally. Media communications have been the biggest losers this year, and rightfully so. Social media has been leading the sector down. For the first 32 weeks of 2022, the S&P 500 is down 10.2%, NASDAQ is down 18.31%. Energy is up 40.32% year to date. For the first 32 weeks of 2022, healthcare is down 5.2%. Media communications is down 24.7% and is the worst performing sector. Tech is down 13.6%. Consumer discretionary stocks are down 18.7%. Finance stocks finance stocks are down 8.9% for the year. The industrials have lost 7% for the year. Real estate is down 13.6%, and basic materials have lost 12.1%. For the past week, the S&P 500 was up 3.2%, NASDAQ up 3.1%. The best performing sector was energy, which was up 7.4%. The worst performing sector was healthcare at plus 1.7% this week. But it's still the best performing sector this year, not named energy. Media communications was up 4.3%. Tech was up 2.4%. Consumer discretionary stocks were up 3.4%. The financials were up 5.5%, making up for last week's flat week. The industrials were up 3.8%. Real estate was up 4.1%. And basic materials were up 5.2%. For the week ending August 12th, 10-year Treasury bond yields ended at 2.849% after a big rise on Thursday due to the realization the inflation report of 8.5% meant the Fed could probably get more hawkish on inflation at the September meeting. Week on week, it was almost unchanged. For the week ending August 12th, West Texas Intermediate crude oil closed at 91.88, up $2.87 this week, or 3.2%. Wholesale gasoline, RBOB, closed at 3.05 from 2.86 last week, up 6.7% this week. Have you noticed how RBOB closely follows WTI up, but not so much when WTI falls? That's why you see WTI up 3.2% and RBOB up 6.7%. Subscriptions are available for $12 a month on an annual contract or $15 a month on a month-to-month contract. I've been producing the Slay the Spider Circle since 1998 and using it to manage private client assets. I've been nearly completely out of stocks for the past year. My portfolio performance is now well ahead of the S&P 500 and NASDAQ indices since I went into cash. That's the total idea behind Slay the Spider. Outperform the indexes in both up and down markets. Now is an excellent example of cash beating the market substantially. I'm looking forward to buying many of the stocks I owned previously at prices well below what I sold them for last year. I will then own more shares going forward, in some cases twice as many. Sure, there were a few stocks I wish I had kept, but in total, I'm more than happy avoiding this